Ryan Ellis, Tax Policy Director for the Americans for Tax Reform. He joins us. Ryan, thanks for joining us. What about it, my friend? How are we going to pay for all this spending? I just outlined about $4 trillion in spending. Where's it going to come from?
Well, I think we both know the answer to that question. It's going to come from us. It's going to come from the American people. You simply cannot increase spending at this level. When President Obama came in, spending was about 20% of the economy, federal spending. His goal is to raise it to 25 or even 30% of the economy. That has to come from higher taxes. That has to come from things like applying the Medicare tax to investment income, which is something they've talked about. Has to come from a new value-added tax, which is something that they keep floating. Has to come from this new bank tax that they're talking about. Every day it seems like there's a new tax idea coming out of this administration or their friends on the Hill.
Okay, so, you know, Obama, the president, as campaigner, promised no new taxes on anyone making less than $250,000. Then I think it got down to $200,000. In order to pay for all this spending, we have two options. We can either just lop it onto the deficit or pay for it. If we do decide to pay for it, what is it? Is it middle class tax hike on the way?
Well, first of all, he's already broken that promise once, and he's trying to break it multiple times in this health care bill. He broke it less than a month or two into office when he signed that tobacco tax hike. The average income of a smoker in this country is $36,000 a year, which the last time I checked was a little bit less than $250,000. And if you go to our website, ATR.org, you'll find we have a document on there that shows there are no fewer than 7. And some people would even say as many as 8 or 9. We're being a little conservative and saying there's about 7 tax increases in this health care bill, which President Obama has endorsed, which would clearly and easily and without any dispute raise taxes on families making less than $250,000 per year. So it's already happening.
All right, let's talk about this bank tax that we found out about this week. The president came out and he said, I want our money back. I'm going to tax we need to tax the banks. How is this not a tax or a fee that's just going to end up being, you know, passed right along to you and me, the depositors of some of these institutions?
Well, look, you'd find me at the front of the line, and I think you'd find most conservatives saying we didn't ever want TARP to happen. And if TARP was getting paid back, and that's what this was all about, we probably wouldn't want to do it through the tax system, but we would like to see taxpayers see their TARP funds recouped. The problem is that this bank tax has little to nothing to actually do with TARP. There are people that are going to be banks that are going to be paying this tax that never received TARP funds. There are going to be recipients of TARP funds that aren't going to have to pay this tax. So the tether between this tax and TARP is weak, to say the least. Look, what this really is about is trying to get the people to shift over their frustration with government, which thankfully they have. They think that the government is moving too far, too fast, spending too much, regulating too much. And Obama is trying to dangle this little bauble over here saying, well, hey, look at these big scary banks. Why don't you turn your anger at them? Well, that's what this is all about.
Let me interrupt you a little bit, but I frankly am a little upset. J.P. Morgan made $3 billion. They reported today, $3 billion in the quarter. They're making money. I mean, you know, they're paying out $145 billion in bonuses this year, up 18% versus last year, all while these stock prices are going down, dividends are getting slashed. Shouldn't they pony up some money?
Look, I think everybody that received TARP should pay it back to the Treasury. Absolutely. That should be done yesterday. That should be done today. That should be done as soon as possible. But this tax that they're talking about is not about recouping TARP funds. It's rhetorical only. This is simply a new tax on the top 50 banks in America. The fact that some of those 50 received TARP funds is accidental, and the fact that others that receive TARP funds, like Government Motors, like AIG, like some of these other companies, aren't going to have to pay this bank tax. So this bank tax has absolutely nothing to do with TARP.
Ryan, I don't know the answer to this, and you please enlighten me here. When we reach $90 billion, which is the kind of the earmark for this tax, does that tax go away? Does it become a fee that was in the past, or is that going to go on in perpetuity so they can use that as a revenue generator?
Look, one of the old axioms in Washington is that once you have a spending program, it never goes away. There's also another axiom that we ought to add to that, which is once you put a, quote, temporary tax increase in place, that never goes away. There are surtaxes that Congress recently renews every year, 2 years, 3 years, whenever they actually need to, that just keep going on forever. It's kind of like, think of it like a toll road. If you live anywhere near a toll road and the toll was originally put in to pay for the construction of the road, chances are the toll's there years and decades after the road's already been paid for. It's like that with any other kind of tax. There's no way that Congress is going to forego this revenue once they're used to receiving it.
You want to know something? That is a great analogy and a perfect analogy. I'm going to have to leave it there. Ryan Ellis, Tax Policy Director for Americans for Tax Reform.